Welcome everyone to HFN, also known as HueFin News. Today is September the 8th, 2020. We're going to talk about the stock market, the Nasdaq, the S&P 500, as well as the Dow. Definitely some changes we are noticing on the horizon for these three indexes. So we felt we needed to do an update for each and every one of you in the stock market. Those who are interested in it and how this analyst, myself, is forecasting stock market weakness. And we're going to try to determine how low the market trapper is going to try to take the value of these three indexes. All right. So this is your first time watching our video, hit the like button, subscribe to the channel, join us on our other social media platforms, specifically Facebook, Instagram, Twitter, even on our own website, HueFinancial.com. All the links are in the description of the video, and even our own website. You know, joining the community is free. So all you got to do is come on in, sign up, log in, and then you have access to all the other content that we have there as well. So talking about the stock market today, the last time we did our video for these three indexes was July the 13th, 2020. And here we are about 2 months later. And we need to update you all on what we're seeing into the market for the stock market and the Nasdaq, which covers the technology sector for the most part. Last week, we've seen some differences that we need to talk about. But first, we need to see how our forecasts fared against the trap. We, as you can see on the Nasdaq, look for the market to go higher. And it has done precisely that. As a matter of fact, last week, the market in the Nasdaq came and plateaued at around 12,485 points, 14.21% from when we did our video of the expectation of the market going higher. So at least you could have gotten that out the market, or at best 6.28. So there you are. That is done. That is over with. And we need to see how the market in the Nasdaq looks going forward. Because one of the things you need to look at that I see is down here at the bottom of my chart, this volume. Something occurred last week in the market that we need to talk about. And it simplifies that definitely there has been some increased participation in the market. You know, we were just trending our way ever so slightly on a weekly basis. And then last week we see this increase in volume. So that tells you making all-time highs into the market for the Nasdaq with this high volume tells you that there was profit taking going on in the market. It's that simple. Many people participated in taking their dollars out the market and bagging up the profit. That's literally what occurred into the market last week. And when you look at the Nasdaq for the monthly time frame real quick, we are not looking pretty good for continuation of strength. As a matter of fact, being at the midpoint of September, we'll definitely have to watch how the Nasdaq ends on the monthly time frame, because quite simple, 10,800, even all the way back here towards 10,000 points is where we can find some more support into the market. When you go back to the weekly time frame real quick, you guys can see here, you know, drawing the trend into the market for the Nasdaq. We need to pay attention to this. This is our new ascending line into the market for the Nasdaq. This area is going to be very crucial. We cannot break this ascending line to the downside. Now, from a weekly perspective, it doesn't look like that line is going to hold. So we need to determine how low can the market go in the Nasdaq to really hold some consolidational trading. The forecast is weakness. From looking at the volume that came through yesterday, the spread of last week, and then the issue of the trap breaking this ascending line to the downside. That's our expectations. So we're going to go ahead and put a forecast into the market for the Nasdaq with some weakness. This area right here, 11,600 points, is restriction as well. But I'm going to extend it up to where we opened up last week, 12,000 points. Okay. And our TP is going to be, take a look at some of the daily real quick. TP is going to be right there at 11,000 points, which is about 3% market move to the downside from where we're at. But given that volume, that's definitely glaring. We could definitely go a lot lower than that to like 10,500 points in the Nasdaq. Okay, so this is our updated forecast into the market for the Nasdaq. We are expecting continued weakness for this particular index. Not looking for this market to hold this ascending line, looking lower TP, and this is going to be around 11,000 points. But again, 10,500, a nice round area. I'm not trying to be exactly pinpoint, but we could at least come down to that particular vicinity to see weakness in the Nasdaq. Okay, so now let's take a look at the S&P 500 real quick. And we're going to play this on the weekly time frame. Okay, so now here's the S&P 500 real quick. Let's look at the performance of what the trap did versus our original analysis. Like I said, this was done on the 13th of July. We expected moving higher. So at least 2.48%. If you were to get out right now into the market, 5.93% profitability, and at the very top of the market, about 11.75%. So let's go ahead and get rid of that. That is over. And the next thing, no difference from the Nasdaq. All these markets are acting in unison, one with another. The volume is a lot higher even from when the market was trending back in March, to where we saw this massive weakness play out in the S&P 500. We've seen more volume last week than that. So we definitely saw profit taking going on into the market in the Nasdaq. In the S&P 500. So we need to continue to expect that until we see a change occur into the market. You can already see right now in the market that 3,400 points is trying to be maintained for support in the S&P 500, 3,400 points. When you look at it on the daily time frame, the volume definitely is something that we need to address. And going forward, the market in the S&P 500 literally can continue to come down to 3,350 to 3,300 points. We're going to play the weakness into the market in the S&P 500 as well. Okay, now just like I did for the Nasdaq, the trend is massive. We're still in the uptrend for the long term, but what we're going to do, we're going to create a smaller trend into the market for the Nasdaq, for the S&P 500. Excuse me. Okay, and in order to make our charts cleaner, we're going to go ahead and get rid of this line there because the market is not utilizing it so far. We're trading so far away from it. And we're going to follow from a weekly perspective how the market in the S&P 500 has been on a very good uptrend. Now, how low can the market go? We don't have that far to go in order for us to really hold support on that line. But yeah, weakness is still in play. So let's go ahead and do a forecast into the market for the S&P 500 with some weakness. You guys can see maybe around 3,300 points to 32 is how we're looking for the market in the S&P 500 for the trap, at least, to try to come in and find some support amongst this weakness that is playing out. So we got two areas of TP for the S&P 500 right here at 3,300 points and then 32. So now let's go ahead and take a look at the last one, which is the Dow. Okay, so here we are, performance from July the 13th to now. You guys can see at least 2.5% at best, or 6 3/4. There you are. It's that simple. Let's get rid of it and let's talk about the market in the Dow. And one of the things you can tell that's different from the other two indexes, the S&P 500 Nasdaq versus the Dow, is that the Dow didn't make all-time highs. The S&P 500 as well as the Nasdaq did. So it kind of gives you an idea where the majority of agreements in bullishness is at. Is in the S&P 500 companies as well as in the Nasdaq companies. The Dow, on the other hand, There's not that much emphasis and demand for those particular type of companies. Why? Because it's obvious it didn't make all-time highs. People did not put their money into those companies. It's simple. So understanding that we hit some restriction once again in the Dow at 29,000 points, 29,500 give or take, lets us know that we plateaued for the time being. And just like we did in the Nasdaq and S&P 500, we're going to do the same in the Dow. We're going to create another line into the market just to show how strong this particular index is and the likelihood of it breaking this ascending line, okay, from a weekly basis. So we're just following how the market has been trending on a weekly basis, long-term time frame, and we still have some indication of weakness to play out. Now, 27,500 will still be a good landing area for the trap to hold support, and we can still see market move higher. So yeah, at least we're going to have a TP around 27,500 points. So let's go ahead and do that now. 29,000 points is going to be our restriction area for the Dow. And like I said, 27,500 is going to be TP initially, which is about 2% market move to the downside. It's not even that bad in order for us to really see that market touch that area. But then the next area is going to be right here around 27,000 points. Okay, so it's going to happen relatively quick, maybe this week, next week, into the market for these three indexes to see whether or not the trap is going to hold the support areas. But don't get it twisted. Based off the volume from last week, the areas that we were pinpointing for TP is in jeopardy of going a lot lower than that. Okay, so keep that in mind as we continue to see these three indexes trade for this week, next week, going all the way into the end of 2020. Questions, comments, let us know. Give us your TP price, give us your direction, give us your feel about these three indexes. Are we higher, lower? And tell us your area of TP. Make sure you maintain a profitability, and I will talk to you on the next one.